Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Real estate is a hard asset, which makes it different from a lot of investments today. But it's not the only hard asset. Today we'll look at another asset class that has a lot to say for real estate and real estate investors. And we've got two awesome guests on the Real Estate Guys radio program. In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me as usual in the co-host seat, it is Russell Gray. Hey, Russ.
Hey, Robert.
It's another exciting edition of the Real Estate Guys, and yet we're going to talk about something today that at first blush might not seem like real estate investors should be interested, but by the end of this show, we're going to have you convinced otherwise. One of the asset classes that we both have studied and enjoy and actually have learned a ton about in no small part because of our two guests today is the asset class of precious metals. And like real estate, the metals are a hard asset. They're real, they're tangible. And so there are a lot of parallels. But I think today, Russ, the context before we have our guests talk about what's happening in the precious metal markets is why should real estate investors care?
Yeah, such a great question. And, for me, I've always been interested. I was collecting coins when I was a kid in the 60s. I watched the silver come out of the coins, which I thought was curious. I saw Richard Nixon take us off the gold standard on live TV on 1971. And so I've always been interested in all of this. And then, of course, I lived through the 70s stagflation. I saw the oil crisis, the existential climate crisis, the existential health crisis. And I see a lot of parallels in what's going on today. And one of the other things I saw that when the dollar collapsed after the 1971 Nixon shock is that gold skyrocketed. It went from like $42 an ounce to $8.50. And of course, to combat that, interest rates in the early 80s got jacked up to over 20% on the prime rate. My very first rental property was over 13% or 12.6 or something like that. And it cash flowed. And so I know that gold is an indicator of kind of what's going on in the health of the financial markets, the dollar in particular. And so when we went through the 2008 financial crisis, I kind of went back and started to pay attention to precious metals. And one of the things we found that as real estate prices were collapsing, gold was skyrocketing. In 2011, it hit a then all-time high of $1,923 an ounce. And so we started attending the New Orleans Investment Conference, which was primarily a metals and mining conference, to get our mind around that space. And that's where a lot of people who were doing quite well were, as contrast to what we were experiencing in our little real estate bubble, pun intended. And it really opened up our eyes to the idea of, gee, what's going on here with the relationship between gold and the dollar, interest rates, and ultimately their impact on real estate. And of course, since then, real estate and gold have both done well. And now we're facing a period of obvious inflation. Even Joe Sixpack on Main Street is feeling it at the gas pump and at the grocery store. So it's very, very real. And so the question is now, where do the metals go from here? What role do they have to play in an investor's portfolio? To me, they're an alternative form of equity. If I'm going to have equity in my portfolio, I can have it in my real estate, where I have to pay points and fees and qualify to get it back out, where it's at risk of mean Mr. Market if the credit markets implode, or I can try to reposition it someplace else as an alternative to cash and as an alternative to real estate equity. Metals can be a great place to park some value on your balance sheet. So for all those reasons and more, we pay attention and we hang out with these two guys because they're two of the best in the business. And I always learn whenever I get a chance to talk with Brien and Dana.
I think there's two primary things you should be aware of as a real estate investor when it comes to the metals. Number one is what Russ just talked about. It's a way to hold equity. It's diversification of product type. It's liquid, those kinds of reasons to own and hold precious metals. But even if you don't want to do that, reason number two is the barometer effect. Often the metals can give us clues about the broader market. You mentioned that when real estate was down back in 2011, that was the height of gold. And look at an asset like silver. And gold and silver are very different, not only, from a science point of view, but the reasons you hold them. We'll talk to the guys about that. But I think even more so is the fact that silver is nowhere near its high right now. Gold is very near its high as we're recording this in April of 2022, but silver not so much. And so why is that? So I think that's the context, is that if you're not interested in collecting coins, then at least you ought to be thinking about what is it that the metals tell us about where the broader market is going, and in fact where real estate is. We'll find out that from our guests Brien Lundin and Dana Samuelson today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at self-storage@realestateguysradio.com.
Hi, this is Steve Forbes. You're listening to The Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station, all the time at realestateguysradio.com. We are real estate guys, but we have learned to love some other asset classes, including precious metals, gold, silver, and a few others. Let's welcome the editor of the Gold newsletter back to the Real Estate Guys radio program, Mr. Brien Lundin. Hey, Brien.
Hey, Robert. Great to be with you, as always.
Well, it's always good to see you, my friend. And you always have your head in this space. In fact, just earlier this week, of course, I was waiting for it, and out came the newsletter that gold was knocking at 2,000. Big picture. Tell us what's happening in the gold and silver markets.
Yeah, well, gold and silver, but primarily gold at this point, is in kind of a stealth rally. It was rallying for a few weeks before the Fed's first rate hike in anticipation of that rate hike. Then, of course, we had Russia invade Ukraine, and then gold really popped very quickly over $2,000 an ounce. And then it fell back down, as always happens during these kinds of geopolitical crises. So that's not really the reason why people should buy gold. And it created some noise in the system in the rally that was already underway. What's happening right now is the Fed is hiking rates. It's in a Fed rate hike cycle. And the record shows that whenever the Fed is hiking rates, it's actually good for gold. Now, that's somewhat counterintuitive, and people have been searching for why this happens. I have my own theories. But the record is clear that the last 4 Fed rate hike cycles, gold has actually rallied during that cycle. And it's doing that right now. And considering, as you mentioned, we're already near all-time highs, we're about to go literally into uncharted territory. And I think if you look at the past cycles, I think we're in a situation where we've got months, maybe 5, 6, or the last time this happened, 8 months of a very strong rally in the gold price. There are a number of technical formations that point toward much higher prices. There are these fundamentals of the Fed rate hike cycle, and it's all working in the favor of gold. And I think this is just the first phase of a multi-year bull run in the metals.
Now, Brian, when we talk about the gold market, people that aren't used to hearing this are thinking, well, is that, 1 ounce gold coins or those bars? But it's bigger than that. Kind of paint the picture of when you talk about the market, just how broad that is.
Yeah, there's a very wide spectrum of gold investments. You can have physical metals, which I strongly recommend that every investor has some physical metals, gold and silver, in their possession or near access. And then you can get into certain derivatives. You can get paper gold and paper silver in the ETFs or even the futures options markets. There's some better ways to do that and some worse ways to do that we tend to go into when we go into more detail. But then you can get into mining stocks, the equities. And even within that sector, there's a wide spectrum from junior exploration stocks, companies that have deposits and are developing them, to companies that are actually producing gold and silver and at every level up to the majors. So lots of ways to invest in the metals. And unfortunately, a lot of people new to the sector get somewhat intimidated by all of the options out there. So it's a constant battle to try and simplify it for people. But step one, the foundation that everybody needs to be concerned about, first off, is getting some physical metals in their possession.
Well, every fall you put on the New Orleans Investment Conference. Russ spoke about that earlier. Since our first year, we haven't missed a year, and it's not just about the metals, although certainly it's a resource conference. You've got folks there in oil and gas and real estate, and of course, some of the greatest economic minds come together to talk about this stuff. And I remember a couple of years in, I said, wow, well, all these different ways to buy gold and silver, and it's overwhelming, it's intimidating, and who should I get my gold from? And you go, oh, that guy over there, Dana Samuelson. So let's meet that guy from America Gold Exchange. Hey, Dana Samuelson, how are you?
Great, Robert. Hi, Russ. It's great to be here with you both. Thanks for having us.
It is good to see you, my friend. And Dana, if you don't know, is a physical precious metals dealer. So why Brien spends his time talking to producers and folks at all ends of the spectrum, what Dana does is help people like you and me buy gold and silver. So before we get into how you do that, Dana, how's it going on your end? So Brien has painted the picture of where the metals are, and we're seeing this increase, and it's been strong. When the rubber meets the road on the street level, what's going on in your neck of the woods when it comes to gold and silver?
Well, demand has been exceptionally strong for physical precious metals, gold and silver primarily, since COVID erupted in March of 2020. We've had a couple of wax and wane phases where demand has eased back a bit, but it's still double or triple what it was prior to COVID. And now with the Russian invasion of Ukraine, we've seen another wave of buying hit the market. So we're back into a bit of a silver squeeze, which Russ and I have talked about in the silver series that we've done about how this can affect physical supplies. Basically, there's more demand for physical silver than there is manufacturers' ability to produce on a weekly or monthly basis. So we get into delayed deliveries and higher premiums because we all have to bid more to get the same merchandise. So we're in a bit of a silver squeeze. We're not really seeing it in gold, although unusually the Royal Canadian Mint is a month behind on Canadian 1 ounce gold maple leafs now, which hardly ever happens. So this is a factor of just a lot of demand in a marketplace where these things are a little difficult to produce. It's very exacting standards. So to get the blanks that the coins are made on primarily is where the bottleneck is, and they just can't make enough of them. So there's been a lot of demand in an environment which is beneficial for precious metals, which is, as Brien talked about, a Fed rate hike cycle, but they're hiking rates because of inflation, which is one of the fundamental drivers of precious metals. And also the war in the Ukraine is geopolitical instability, which is another one of the most fundamental drivers of precious metals prices. And you've got both of those at the same time. And now the Fed is going to probably overreact a bit because they've underreacted to inflation. And at last month's print at 8.5% year on year inflation, we're back into full 1970s style inflation again. And looking back then, the Fed reacted very aggressively. As Rush mentioned earlier, they raised the Fed funds rate to 19.5%. It fell back down to 10, but they didn't kill inflation. So they had to raise it back to 22% in 1981 to kill inflation. In the last 15 years, I mean, we've seen Fed funds rate at 2.5%, 0%. The world is not ready for these kind of really sharp rate hikes, which are going to affect every market. But this is very beneficial for precious metals overall. I have a hard time seeing how precious metals prices will get much weaker, and the potential for them to go substantially higher are very good right now.
Yeah, Brien, let's talk about inflation, because when we were all together at the Investor Summit last year, the big question was, is inflation transitory? And most of us came away thinking that, well, most of it is probably not. Now we know it isn't transitory. We're seeing crazy amounts of inflation, so much so that, as Russ alluded to, Joe Sixpack, when he goes to buy that six-pack, is paying more for it. Tell us how gold helps us to see what's happening, and then why it is that not just individuals, but even institutions will jump into the metals at times like this.
Yeah, gold has this reputation as an inflation hedge, and you've seen a lot of pundits come out over the years saying gold really isn't a good inflation hedge. And I hate to say it, but they're right. It isn't. It is not a hedge against inflation. It does not follow the CPI tick for tick. If you wanted an inflation hedge, you would invest in oil or energy, because it's the only asset class that's actually a part of the CPI calculation. So it really doesn't follow the inflation rate tick for tick. What it does track and follow or react to is the public's concern about the purchasing power of its currency, its local currency, fiat currency. And of course, the dollar is dominant in that respect. So when you have things get so extreme that people start to worry about the collapsing value or rapidly decreasing purchasing power of the currency, then gold reacts and it makes up for lost time. That's why you need to hold gold. That's why investors, anybody who has a significant portion or significant wealth accumulated, needs to hedge that by owning precious metals, because it balances or hedges against something that we know is going to happen, and that's the depreciation of fiat currencies. That's what's happening right now. Inflation has surged to levels that have exceeded what we saw in the 1970s, at least on a real basis. Real interest rates are now more negative than they were in the 1970s because interest rates are so low. There are a lot of differences between now and the 1970s, though. Back in the 1970s, we only had about 30% of the GDP in the form of the federal debt. Right now, we're at about 135% or 130%. And what that means is that the Fed is essentially powerless in this situation to battle inflation. And that's the real catch here. That's why I believe we're going to have a second phase in the gold bull market, when the Fed is actually forced to stop raising rates and is forced to start easing again. That's because they can't raise rates much higher than really where they are today. And they can't get rates to be positive on a real inflation adjusted basis because the cost of servicing that debt is so great. With debt now over $30 trillion, if the Fed gets the Fed funds rate, for example, to about 2%, the cost of servicing that debt will, in my calculations, exceed $1 trillion a year. And I just think that's a line that politically they cannot cross. And that would essentially crater the federal budget, or overwhelm the federal budget. I think that's the barrier. So even if the stock market doesn't tell the Fed to lay off at some point beforehand, I think when they get to the Fed funds rate at about 2%, we're going to see the cost of servicing that debt rapidly escalate and prevent them from going any further.
In Gold Newsletter, I love how you always are painting the picture of this is going to happen, that's going to happen, here's what happened last week and why. And you are eerily correct, my friend. I still don't know how you do that. But the drumbeat that you're always beating and you mentioned it here, I don't want people to lose this, is that long term, we know that the purchasing power of the US dollar as a fiat currency is headed in one obvious direction. And what the metals do is let you at least have a portion of your portfolio that doesn't fall that way. Can you speak to that?
Yeah, you have home insurance, but you don't expect your home to catch on fire. At least I hope you don't.
Right.
Gold is insurance against something that is not a possibility. It's something is going to happen. The purchasing power of the dollar, or whatever your home currency is going to depreciate. It's only the rate that's in question. And right now the rate is increasing, and there's a lot of fundamental evidence out there that it will continue to accelerate. So it's very important that you don't look at gold and silver and say, wow, it's moved so much. It's at near all-time highs. I'll wait till it comes back. The one thing that's not going to happen is that the dollar depreciation is not going to suddenly slow down, or the dollar is not going to start to appreciate in value. Right now, if you have cash sitting in a bank account, it's losing value at a rate of 8.5% a year because you're not earning anything on interest. You might as well have that in either income producing real estate, which you guys, of course, are the experts in, or convert it into gold holdings, as Russ has demonstrated time and again, how you can do that to leverage and build equity. But you need to have it in something other than the dollar.
One of the things that all four of us do pretty much every day, I'm going to guess, is to watch the spot price of where these metals are. And it's not only gold and silver. Those are the primary metals. We also look at platinum and palladium, and maybe you guys can talk about that for a minute. But my point is this: spot price is what the market is saying. But Dana, when the rubber meets the road, that's not the price I pay. I see silver's $26. I call up Dana. I don't get $26. And you mentioned the premiums before. I think this is important for people to understand right now, because we've seen for the last couple of years those premiums really change.
Yeah, so a fabricated precious metals product is made to exacting standards. So a mint or a refinery has to make that blank that the coin is struck on, or the blank that the bar is made from, or pushed through, like a Play-Doh gets extruded, is how some 100-ounce silver bars are made. These are very exacting standards for purity and weight, diameter and thickness. So that's not cheap to do. You have to make dies and have a pretty high-end production facility to produce these products reliably, so they have the integrity they're supposed to have. Then you have production costs, and then you have insurance, shipping charges. So a fabricated silver 100-ounce bar normally would trade on the street at market price, silver price, plus about $2.50 an ounce. 1 ounce silver sovereign minted coins would normally trade to the public at $2.99 to $3.99 over the silver price. I'm paying more than those numbers now to buy the same merchandise from these refineries and sovereign mint products, and I have to make a profit myself. We make a couple dollars an ounce on silver, $1 to $1.50 to $2 an ounce on silver when we resell it from these minting facilities. We make 1% on gold on 1 ounce coins. It's not a lot of margin for a high dollar product, but you cannot buy these products at the metals price because you have to pay for manufacturing, distribution, and for profit for a dealer like myself. But our margins are very tiny, as you all are aware. So we run a very tight ship. I wish we could sell it at the spot price, Robert. It just doesn't happen that way.
Well, the reason I wanted to bring up, Dana, is obvious. All those are the reasons we see that premium, and it's totally fair, makes sense. Just from a manufacturing perspective, I'm guessing those companies and mints have a little more paid security around than maybe other manufacturers do. So all that factors into the price. But I think the thing we've seen the most recently is just how much these premiums have gone up. And one, break the paradigm. It doesn't mean the dealers are making more money. Actually, it's probably the contrary. But just as one more signal that demand is there and supply is a little constrained.
Yes, it's a very competitive market. And usually when there's plenty of supply, we don't have pricing power. Like most companies have not had pricing power in the grocery store, in the marketplace until recently, because inflation has given these companies some pricing power now. But when we get into a supply deficit, we have to pay more to get these metals, so we have to charge a little bit more for them. And that's an indicator that there's a lot of demand. That's exactly right. It doesn't happen very often. This is the third or the fourth time in the last 15 years we've been in one of these situations. But the real point now is it hasn't abated. We haven't had a chance to play catch up because demand just keeps coming. With inflation at 2% or less, which it was for the last 6 to 8, 9 years, Joe Sixpack doesn't feel that inflation when he goes to the grocery store. But now at inflation 7 and 8%, he does. So people are changing their mindset about what they're doing with their money, their investments, and looking at the future. And they're trying to react to this. And I know that you're a beer lover, Robert. One of the things I just read a few minutes ago was that between the Ukraine and Russia, they produce 23% of the world's barley and wheat. So craft beer prices are probably going to go up, and that's going to affect Joe Sixpack even a little bit more. So, in fact, the war in Ukraine is very inflationary on a couple fundamental levels for energy and food. And it's just now the cusp of that is starting to hit. So we're going to see higher food prices for the rest of this year, and oil prices could go substantially higher still. So the inflationary pressures are not going to ease easily. And as Brien said earlier, the Fed probably cannot react in the same aggressive manner today that they did in the 70s. So inflation could really run hot and stay hot without a corrective phase caused by the Federal Reserve.
We're talking about precious metals today. Our guests are Dana Samuelson and Brien Lundin. We'll have more when we return. Plus, we're going to play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
As real estate investors, it's no secret that the real estate guys love Florida, and the Sunshine State continues to receive more than its fair share of businesses and population relocating from the Northeast, which has created a huge opportunity for real estate investors. So come join Russ and me in mid-August for our Jacksonville, Palm Coast, Ocala field trip. On this highly interactive trip, you'll get an up-close, hands-on, personal experience you'd be hard-pressed to find elsewhere. You'll feel the vibrancy of the markets, observe the quality of the infrastructure, and truly get a sense for the demographics, all things you just can't do by simply searching online. Plus, we'll introduce you to our Boots on the Ground team, and you'll meet some amazing investors from all over. To reserve your spot, go to realestateguysradio.com and click Events, where you'll find the Jacksonville field trip. There's a big difference between researching a market from afar and seeing it with your own eyes. So join the Real Estate Guys as we explore not one, but 3 amazing real estate markets. Go to realestateguysradio.com and click Events for the Jacksonville, Palm Coast, Ocala field trip. See you there.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hello, everybody. David Stockman. I'm the author of the Contra Corner blog, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you want to see an awesome real estate market up close and personal, then come to the Belize Discovery trip in August. We'll have a great time, see lots of beautiful real estate, and get to hang out a bit. All the details on the website at realestateguysradio.com under the tab that says Events. We're talking today about the precious metals. What does $2,000 gold mean for real estate investors? We'll continue our discussion with Brien Lundin and Dana Samuelson after we play Real Estate Trivia, your chance to win a prize by knowing something about real estate and metals. That's our question today. When you hear it and think you know the answer, send your best guess to trivia@realestateguysradio.com. trivia@realestateguysradio.com. The first person that gets the right answer gets an awesome book called Purpose, Passion, and Profit. It's a collection of entrepreneurial stories, including one from Dana Samuelson, plus stories from our good friends Dr. Tom Burns, Jerry Horst, Michael Manthe, Grammy Award-winning Seth Mosley, and yours truly. That book can be yours if you know today's real estate trivia question. Last time around, it was Ask the Guys, and we had lots of great questions from listeners. Here was our question for trivia. Which U.S. state has the most tornadoes? Well, the United States has a higher average number of tornadoes per year than any other country in the world. In fact, the U.S. endures more than 1,200 tornadoes per year on average. And according to the National Oceanic and Atmospheric Administration, it's the state of Texas that has the most in the U.S. The average annual number of tornadoes in Texas each year hovers around 150, followed by 90 or so in Kansas and around 60 in Florida. Here's our real estate trivia question for this week. How do we come up with trivia that has to do with precious metals and real estate? Well, here you go. Which country produces the most silver? Silver is produced all around the world, but which country consistently produces the most? If you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your mailing address, because the first person that gets it right gets this awesome book, Purpose, Passion, and Profit. That's today's real estate trivia question. We love real estate. Today we're talking about the precious metals. It's not that different, really, a tangible, hard asset. And our guests are Brien Lundin. He puts on the New Orleans Investment Conference every year. He's also the editor of the Gold Newsletter. And Dana Samuelson and his company helps people actually buy physical metals. Dana and Russ put together an awesome series. We call it the Silver Series, Making Sense Out of Silver. It's a great tutorial. So we're not starting exactly at the beginning today. If you've never thought about the metals and you'd like to learn more, just send an email to silverseries@realestateguysradio.com. silverseries@realestateguysradio.com. You know, real estate has friction, and one of the challenges of investing in real estate is that I have to kind of keep a long-term mindset. Sure, you can flip a house, but you have to create enough value to be able to pay all those exit expenses. So if I go to sell a piece of real estate that I've had in my portfolio for 20 years, I'm going to pay 8 to 10% in fees. And gold and silver are no different. The difference, though, is the liquidity. I can walk into a reputable gold dealer today and turn that wonderful real money into fiat currency if I wanted to. I haven't done that, but I hear it's possible. But I think the liquidity is very different. In real estate, it's one of the downsides that unless you're just willing to discount your price like crazy, there may not be a buyer. Dana, how liquid is an ounce of gold?
It's one of the most liquid investments anyone can own because gold has no counterparty risk. You don't need anybody else to tell you what it's worth except for what the market will bear. You can walk into any precious metals dealership around the country, present your merchandise, and be paid immediately, either in cash or company check or a bank wire. It's one of the most liquid things there is, which is why Russ likes to have it as part of a balanced portfolio. And I've actually followed Russ's strategy to take some equity out of my properties. I have a few properties myself, and put some into gold for liquidity and diversification and a counterbalance to the dollar. So it's extremely liquid.
And I would add to that, there are maybe even some realms of privacy involved. We'll leave that for another show. Hey, Brien, let's talk about what the exciting part, I guess, the more roller coaster part of investing in gold is, and that is investing before it becomes gold in the mining companies. This is a huge, huge area of study. There's probably no one on the planet that knows these companies and what they do better than you do. But for folks that are interested in getting exposure to the metals in that way through equities, both private and public, how does that part of the market work?
Well, the way it's supposed to work is that as gold and silver rise in price, then the companies that are actually producing the metal make more profits, and they rise, their value rises more than the metals themselves. That's the way it's supposed to work. The last time we had a big run in gold from, say, 2008, the depths of that financial crisis, to 2011, the gold price nearly tripled. but the miners lagged gold. This is the first time it ever happened, because concurrent with all of that, we had energy prices rising. We had the price of oil rise to over or around $140 a barrel. And come to find out, those big yellow trucks running around in a mine use a lot of diesel.
Yeah.
And so their profit margins collapsed even as the price of gold and silver were rising. So it doesn't always happen that way, but it usually does. They usually offer leverage. And then if you get toward the much more speculative end of that spectrum that I specialize in Gold Newsletter, which is the companies that are exploring or developing projects, then those can really move, but they're much more dependent upon their individual circumstances. If they find something, if they're about to find something, if they're getting good drill results, and they tend to rise as a group as precious metals are rising, because it brings a lot of generalist investors into the sector who are looking to invest in these really high potential, highly leveraged companies. Now, they are much riskier, and you cannot go into this sector and just jump headfirst into the water and expect to have great returns. But the benefit of the sector is that it is very inefficient. If you are willing to put in the time and effort, as with anything, if you dedicate some money, some skull sweat, some effort, go to conferences, subscribe to the best newsletters, et cetera, then you can find some of these gems that are lying, waiting for you, and take advantage of these inefficiencies, companies that the market has missed. We had one of those in Gold Newsletter just today. I'd been telling our readers that the market is not recognizing that this company has a great drill hole, that they're waiting on results. The company even put out a news release saying, this looks great. We're extending it to over 1,000 meters in depth. Nobody really acted on that. And today they put out the first results and the stock's up over 35%. Those are the kinds of inefficiencies that if you put in the time and effort, you can find them. And so it's a fun area. But again, it's not for widows and orphans. It's something that you need to have some resources and be willing and able to accept some losses and some added risk.
Well, I want to bring it up because not everyone recognizes it. And two, if you think just stacking away coins is boring in any way, well, then here's a way that you can add a little bit of that excitement. At the same time, Dana, there is an area of investing in metals that has to do not just with what the spot price is and the value of the underlying metal, but the rarity of the coins. Russ mentioned coin collecting when he was young, and there are certainly some aspects to what you do in dealing in actual coins that have to do with how rare the coins are. Can you speak to that part of the market?
Yes, of course. About half of our business is vintage pre-1933 U.S. gold coins that were made as money currency back in the day. And they survive in limited quantities compared to what was made. There's millions of them that exist overall, but there's also quality ratings that these coins have today, whether they're gem condition, like the mint made them yesterday, even though they're 100 years old, or modestly circulated, which means they've been worn a little bit. So there's various degrees of quality rating or mint condition or circulated condition today that affect their value because their survival rates tend to be lower the higher quality. So we do a pretty big business primarily in the old $20 gold coins and $10 gold coins because they're the most popular. The $10 gold coins have just about a half an ounce of gold in them, and the $20 gold coins have about 1 ounce of gold in them. So these are heavy pieces of currency that are in limited supply. So when there's more demand than there is available supply, premiums can rise much more appreciably than we see even in like physical silver today, which the mints can just make more of next month and the month after. But when there's a lot of demand for physical product, there are not a lot of these vintage $20 and $10 gold coins to go around. So in 2018 and 2019, our market was very quiet and premiums were at all-time lows. And we sold a lot of these coins to our clients when the gold price was lower and the premiums were as low as we've ever seen them. Now we've seen the gold price rise and the premiums re-expand. So some of our clients have doubled the appreciation of gold in ounces over the last 2 or 3 years by being positioned properly prior to this. But in many cases, the average premiums are still at 10-year averages. So some of these coins are still trading below trend by a little bit, and there's still opportunity there. Plus, they're completely private. They're recognized the world over, and there won't be ever any more of these made. So over time, there'll be fewer and fewer of them, so that they bode pretty well as a way to own physical gold, have some modest leverage to maybe a bit more than a modest leverage. There's a little bit more risk there too, but it comes with a reward, and have financial privacy too.
So just another way that you can put metals in your portfolio and maybe make it interesting for your kids and grandkids as well. I think that segues into something I want to pick your guys' brain about, and that is there's this theory that had it not been for cryptocurrency and all of the millions and billions of dollars diverting over there, that the precious metals market would be even stronger. And I think for folks today who are trying to figure out how to put together a portfolio, they've certainly got to consider precious metals, but they also have to consider cryptocurrency. You guys are obviously in center ice of the metal space, but what are your thoughts on how cryptocurrency either can relate to gold, there are some gold-backed cryptos, or is it just a completely different thing that people should consider in their portfolios?
I'll start off. I think that crypto has definitely stolen some of the speculative demand for gold. And I think that crypto has been revealed through the Ukraine crisis and more, that it is more of a speculative investment, at least at this point, trades like a tech stock. It is not acting like a store of value or anything that you make long-term strategic allocations for, but it is speculative, and it has taken that portion of the demand. I think, yes, gold would be trading higher if there was no crypto alternative right now. However, a lot of that demand is the kind that what we call weak hands, that they'll bet on the trend and they'll get out if the trend falters. What we're seeing right now in gold and silver are the kinds of strategic allocations from big investors. We see daily that there are battles over the gold price, and on every dip, or virtually every dip, we see buying coming in and reversing the sell-off. So there are a lot of people out there who are, as we talked about earlier, concerned about the rate of depreciation in fiat currencies and their purchasing power, and are making allocations towards the metals, big strategic allocations. And that's the kind of buying that really lifts and supports the market over the long term.
And Dana, do you see that some of your customer base says, well, I'm not going to buy as much because I'm investing in cryptocurrencies? Has that affected business at all?
Yes, we've seen clients who have invested in crypto instead of precious metals. Using Bitcoin as the poster child for crypto, it's limited in the supply, which gold is, which has given it some of the volatility, but it's had real extreme volatility. I was talking to one of my coin dealer friends about a year ago, and he asked me what I thought, how much crypto had taken off of the price of gold. And I said, I didn't really think about that. He said, well, maybe $500 an ounce. I said, that's very possible. And I think it is probable. So gold could easily be, over $2,000, $2,200, $2,500 an ounce without crypto. But we do have crypto. One of the things it does allow is people to move money over borders easily, which is what gold has always been good for as well. Now, there's some government clampdowns on that with the Chinese, but we are seeing a lot of our clients have been invested in both, and they move around a bit from one to the other as the markets change. So it's a viable alternative. The governments are going to get into the crypto business. As we all know, it's coming. I just don't know what the regulations are going to be on it. They're already talking about taxing the profits. But we get paid in Bitcoin today, which we like. So there's a place for both. It just depends on what's appropriate for you.
Well, there sure is. And today, having more choices in your portfolio is better than fewer choices. And, some of my favorite crypto people invest in gold and silver. They're not dummies, right? They recognize that the long-term viability and the fact that it is money is part of the attraction. And we always want to jump on, in real estate, we jump on the latest trends. Here's what's going on in multifamily. Here's what's going on in commercial. But at the same time, they ain't making any more land. All right. Well, gentlemen, this has been fabulous. If you want to learn more about the metals, then I can't imagine a better place than the New Orleans Investment Conference. Happens in the fall this year, October 12th to the 15th. We'll be there. Brien, share with us some of the highlights of this year's New Orleans Investment Conference.
Well, you just mentioned the highlight that you guys will be there, of course. But we do have some wonderful speakers. I have to say that last year's lineup was pretty incredible. George Gammon, James Grant, Jim Arurio, Dave Collum. The list goes on and on. Danielle DiMartino Booth, all of whom are not only friends of mine, but have become friends of the New Orleans Conference and are eager to return. And happily, I'm inviting the vast majority of them to return. Really, all of them. We had such a great lineup. So we'll have them and some more. It is the place to go to look at all of the sectors, but also get in an atmosphere where there's just scintillating intellectual energy and people who really are very accomplished investors willing to share their ideas. And we explore topics and explore ideas that you will not find in the mainstream financial media, really all across the board, all asset classes. If you're wondering whether you should go, ask someone who has been, and they will tell you. It is a wonderful experience, a very rewarding experience.
You know, what I love about it is not only do you have a wide array of conference speakers, sometimes people with different positions on things, which we love, but also if you're brand new, like when we were brand new to understanding metals, you can go around and talk to the people that work for the mining companies, the exploration companies. I mean, and they don't look down at you because you're new to the space. And sometimes you're talking to a geologist, sometimes you're talking to the president or CEO of the company. And then the other part is just talking to the other attendees. They are always happy to lend a hand if you're new. And of course, one of the big things that happens at the New Orleans Investment Conference is the famous Real Estate Guys party. And if you want to be invited to the party and the conference, all you have to do is send an email to neworleans@realestateguysradio.com. neworleans@realestateguysradio.com. It isn't only a conference, it's the oldest running investment conference in the world. So, Brien, we will definitely see you there.
Thank you, Robert. Looking forward to it.
Hey, Dana, I know folks are interested in learning more about investing in metals. We already told them about the Silver Series, which is certainly a great place to start. And that's just sending an email to silverseries@realestateguysradio.com. But if you haven't bought gold or silver before and you want to be connected to the amazing Dana Samuelson and learn a bit about it as well, just send an email to preciousmetals@realestateguysradio.com, preciousmetals@realestateguysradio.com. Final question to you, Dana, and that is the other precious metals, platinum, palladium. How much are people interested in those, and has that changed as the pricing has changed?
Well, platinum and palladium are more industrial metals. They are scarcer than gold and silver fundamentally. Platinum is about 20 times scarcer than gold in the ground, and palladium is 2 times scarcer than platinum. The major suppliers of both of these metals are South Africa and Russia, which is where Brien can correct me on this. I believe 90% or more of the world's platinum and palladium supplies come from these two countries, and about 50% of each from Russia. So we've seen the palladium price really take off over the last 5 years because it is used in gasoline automobile catalytic converters, where platinum is used in diesel automobile catalytic converters. And there's been less demand for diesel since the VW diesel scandal in 2015. We did see the palladium price get whipsawed when the Ukraine invasion came because of the Russian sanctions. It ran from about $2,200 to $3,000 an ounce. Now it's all the way back down to $2,400. So it's been moved around by the Ukrainian invasion. But these are commodity metals. They're not really currency metals. Like gold is fully a currency metal. Silver is about a half currency metal. Platinum and palladium are more commodities, but palladium is really scarce. They're going to need it in hydrogen fuel cells as well. So for technology, palladium is potentially a good longer-term speculation, but I've never seen it at the multiples it is of gold today, or have I seen platinum at the discount it is to gold today. So there's some unusual quirks about the pricing, but I do think the palladium trend is your friend, and I think it's destined to go higher.
There's our friend Dana Samuelson. He's with American Gold Exchange. Dana, thanks so much for your contribution today.
Thank you. It's been great to be with you guys.
You're tuned to the Real Estate Guys radio program. When we come back, I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just to start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brien Lundin, Dr. Chris Martenson, and many more. Email future@realestateguysradio.com today.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hey, this is John Asraf, and you are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning in to the show. Hey, if you want to have more impact and better influence on the folks around you, or you just want to get really good at selling, come on out to our 2-day sales workshop. It's called How to Win Funds and Influence People. It happens in May in Dallas, Texas. All the details on the website at realestateguysradio.com under events. Well, it's nice to take a little bit of a breather from real estate and talk about another area we're both fond of, Russ, and that is the precious metals.
I love the precious metals. You know, we've been talking about real assets as being the antidote to the instability of the paper asset markets. The stock market, I think anybody could make the argument that it's in a bubble. Just based on the price of the shares versus the average earnings. And of course, people don't even think about earnings anymore. Real estate investors invest for cash flow. They think about the earnings of the property, the net operating income, the cap rate. And it's a normal, natural way for real estate investors to think. They can't even imagine. I think a lot of real estate investors can't imagine just buying a property, sitting on it, hoping it's going to go up in value and then selling it for more. I mean, there's some of that happens in a market like this. We certainly saw that run up happen from 2000, after the dot-com collapse and all the money coming in from stimulus there and interest rates going to what was then record lows and money pumping into real estate. But precious metals obviously don't produce any income. And so I don't really consider them to be an investment. They're just an alternative form of money, if you will. They're actually money. I mean, if you make the argument that currency is something that is a medium of exchange and money is a store of value. It used to be one and the same. Today they're separate. I think you have to have both. So you're definitely going to have some dollars because you need to be able to exchange. And if we have an economic hard time, you're probably going to see the dollar get a little bit stronger in some areas. If the financial system, the credit markets collapse because of these rising interest rates, housing prices could drop. If you've got cash, that's fantastic because you can move in and pick up some bargains, especially if those are cash flowing pieces of real estate in great markets. Brien talked about the inefficiencies in the mining space, in the mining stock space. Well, those same inefficiencies exist in real estate. It's one of our favorite things, the inefficiencies of the market, the opportunity to find a quote unquote deal because no piece of real estate gets perfect market exposure. Well, the same's true in mining stocks. I think real estate is arguably easier to understand, and you can bring financing in. But the precious metals have a very important role as somebody who's watching the macro. What is it saying about the bond market? What is it saying about the currency? What is it saying about the strength of the financial system? What is it saying about the trend of inflation? And it also has a role to play in terms of an alternative form of equity on your balance sheet. To Dana's point earlier, it's a place to put equity and store long-term value apart from your real estate. I mean, I know I kind of taught that to him or got him to think about it that way, but I have to say I agree with it because you can convert it to cash so easily, and not just dollars. The other thing to realize is that when you are based in precious metals, you have the opportunity to pivot into any currency. It's like home base. It's a place to go where you can pivot into any currency. I think people need to be paying attention to the dollar right now. American investors in particular need to begin to expand their education and ultimately their portfolio to prepare for the possibility, I'm not even going to say probability, that the dollar could fundamentally change in its role as a world's reserve currency and in its core strength. We're seeing some of that with the Russia-Ukraine situation. And whether that manifests into a complete fundamental change or whether just an overall trend in accelerating the weakening, I don't know. But better to be prepared and not have a currency collapse than to have a currency collapse and not be prepared.
Big thanks to Brien Lundin and Dana Samuelson for sharing their knowledge, wisdom, and experience with us. Both these guys have been around a long time. They've known each other a long time. You can see them both at the Investors Summit. We'd be shamelessly promoting that right now if it wasn't completely sold out. You can get on the waiting list still, but that's a long shot at this point. But they'll also both be at the New Orleans Investment Conference, and so will we. We'll hang out there. We'll have lots to share, and who knows, maybe have a great conversation over a beer. If you'd like to be invited, just send an email to New Orleans at realestateguysradio.com. Next week, it's back to real estate. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.